Currently, the digital asset market is 1.7 trillion. So what is it going to be worth? At least 100x from here still, probably 200x, maybe even 500x. So that's the magnitude of the opportunity we all have in front of us. And this is the biggest thing we've ever been given in anything.
That gives me the confidence that it's not just, let's say, like Wall Street Bets, where it's basically a bunch of retail investors trying to maintain price action. Here we've actually got a broadening, diversifying, deepening market, which looks perfect technically, has a good roadmap, has good seasonality. It's like, if you can't find conviction here, you're never going to find it. Because like you, this is like the perfect storm, positive storm for Bitcoin.
So how does the digital asset ecosystem sort of factor into or translate into this sort of new ecosystem for apps and markets and all of the other things that I think we see the potential for?
So there's two things going on at the same time. One is there's a parallel financial system being built. And if we talked about going out with a whimper, not a bang, we all know how screwed up the current financial system is. And we thought it might go with a bang, but they've rescued it every time by creating more externalities and more laws of unintended consequences. I think everybody knows that now. I think the central banks know. I think everybody, it's not a secret. But what we're doing is creating this parallel financial universe, which is distributed, recorded, trusted, and that is a much safer system to build on. And what we're seeing is a slow migration, and that is why we're seeing the rise of Bitcoin prices and digital asset prices go to the roof. Price discovery. Everyone's moving into the new home, and this is the new home, and it's over here. And when all of those baby boomers moved into their new homes back in 1980 or whenever they were 30 years old, the price of all those homes went up. This is what's going on, right? So there's a slow migration, and we're seeing it from the traditional investment managers, we're seeing it from family offices, we're seeing it from individuals, and we are seeing it from central banks who are now, because of Bitcoin, created digital currencies to realize there's a new digital world. That's one thing going on. If that's not big enough, within that is embedded decentralized finance, where algorithms provide yields. There's lending, transmission, remittances, payments, custody, settlement. I mean, this is a multi-quadrillion dollar world that's being developed, in terms of flow, in terms of stock, the bond market, the equity markets, all of these things are $200, $300, $400 trillion markets each. And a lot of this is going on to this. So this is the magnitude. And currently, the digital asset market is 1.7 trillion. So what is it going to be worth? At least 100x from here still, probably 200x, maybe even 500x. So that's the magnitude of the opportunity we all have in front of us. And this is the biggest thing we've ever been given in anything.
That gives me the confidence that it's not just, let's say, like Wall Street Bets, where it's basically a bunch of retail investors trying to maintain price action. Here we've actually got a broadening, diversifying, deepening market, which looks perfect technically, has a good roadmap, has good seasonality. It's like, if you can't find conviction here, you're never going to find it. Because like you, this is like the perfect storm, positive storm for Bitcoin. Institution and Bitcoin goes up. So let's say it's a 5% weight in your portfolio. Let's say Bitcoin triples. It's now 15% weight in your portfolio. You're now overweighted. The difference to you and I holding it versus asset allocation. And that's going to bring volatility down. Because as you rightly say right now, there are no sellers. So anybody comes into the market, the price gaps up, then there's a bit of retail leverage that gets stopped out in small sell-offs because it's quite illiquid at the marginal price. But what's going to happen is these institutions are going to be buying and selling on a monthly and quarterly basis. They'll be buying into dips, they'll be selling into rallies to keep their allocation in line. And what's going to happen is Bitcoin's going to go from this 70 vol beast to 60 volt, to 50 volt, to 40 volt. And if you get to a world where Bitcoin is the reserve asset, then it's going to be a fivefold.
But anyway, we are moving towards a digital currency world. Now, how long does that take? Probably 5 years. Find me a single other asset that's going to give you 100x asset. And it also has a tremendous store of value. So while the world is basically debasing fiat currency, Bitcoin, on the other hand, is hardening its currency, as the algorithm every few years reduces the supply of Bitcoin, which is the absolute opposite of all other asset classes. So it makes it extremely hard as an asset. And it's just about faith. And I think at $10,000 a Bitcoin and a market cap of 200 billion, we're pretty close to saying, okay, there's enough people that have faith and adoption in this. The next phase is, where does it go from here? And speaking to many of the big family offices, investment funds, everybody else, basically the entire world is short the upside of this. If Bitcoin goes up to 20,000, the next skeptic's going to go, Christ, okay, I get it, I need to get in. If it goes up to 50,000, half the endowments, half the family offices, all right, we're going to have to get in, because the more it goes up in market cap terms, the more meaningful it is. Because it's not just a super spike that goes up and down like tulip bubble, right? It comes over time a growing adoption. And what it is, it's a growing adoption to a new entire system. Bitcoin already is the best performing asset price in all best performing asset in all recorded history, right? So nothing has ever performed like this has.
Okay.
So it would be a slowdown of the rate of change of growth to say $1 million in 5 years. US dollar's not going anywhere, but it just has to be used less. There's two things I always advise everybody. He who has cash in a recession is king. Because you're the guy who can buy stuff when everybody has to sell it.
So if you are an institution who wants to buy Bitcoin and you've got to go through all this rigmarole to try and get it signed off, and Coinbase IPO comes out and it's a $60 billion company, and you can stick a few billion in, it's a good enough proxy for a while. So my guess is that's going to take out a lot of demand from institutions in the short term. It's not a long-term thing, but it will absorb quite a lot of the demand. The next big thing after that is, I think 100,000 is going to be an issue, because a lot of people got in around 10. A lot of people will have made 10 times their money, and 100,000 is a round number. And people think, let me take half my chips off the table. So I think we might see a longer correction. And my guess is, my framework I'm using, and I'm using some seasonal analysis, suggests that we go up to 50,000 into March. That works perfectly for the Coinbase IPO. Everything calms down because institutional buyers stop piling into Bitcoin futures. They buy Coinbase first because they can justify it easily because it's just an equity. And then the next run, I think, takes us to 100,000 into June, by which case there's going to be a lot of profit.
Parallel financial system being built.
Let's say like Wall Street Bets, where it's basically a bunch of retail investors trying to maintain price action.
But anyway, we are moving towards a digital currency world. Now, how long does that take? It comes over time a growing adoption. And what it is, it's a growing adoption to a new entire system.